Today, we are taking a closer look at an important discussion surrounding the Iraqi dinar, and that discussion is about currency supply, the transformation of Iraq's monetary system since 2003, and the question of whether the destruction or withdrawal of old banknotes can have a meaningful impact on the value of the dinar. There is a lot of speculation surrounding this subject, so it is important to separate what is economically possible from what is simply being assumed. One of the biggest mistakes in analyzing the Iraqi dinar is comparing today's currency directly with the dinar that existed several decades ago. Iraq's monetary environment before 2003 was fundamentally different from the system that exists today. Iraq operated with a far more closed financial and economic structure. International access to Iraqi currency was limited, and the Iraqi banking system was not integrated into global financial markets in the same way that modern economies are expected to be. That historical context matters because the value, circulation, availability, and international accessibility of a currency are all influenced by the monetary and economic system surrounding it. Before 2003, obtaining Iraqi dinar outside Iraq was considerably more difficult. Today, Iraqi dinar banknotes can be found outside the country through currency dealers, collectors, travelers, financial intermediaries, and other channels. That does demonstrate that the international environment surrounding the dinar has changed. However, simply having Iraqi dinar outside Iraq does not automatically mean that the currency is preparing for a dramatic revaluation. Currency ownership and currency valuation are two different economic questions. The more important issue is supply and demand. Like other currencies, the Iraqi dinar exists within a monetary system where the quantity of currency in circulation, the demand for that currency, the central bank's policies, inflation, foreign exchange reserves, economic growth, banking activity, and confidence in the financial system all interact. Therefore, when people discuss the possibility that the Central Bank of Iraq is destroying or withdrawing banknotes, the key question should not simply be how many notes are being destroyed. The key question is, what happens to the total monetary supply after those notes are removed, and why are they being removed? Central banks routinely manage physical banknotes. Damaged, worn, obsolete, or otherwise unsuitable notes can be withdrawn from circulation and destroyed. At the same time, new notes can be issued to replace them. This means that the destruction of physical banknotes by itself does not necessarily reduce the broader money supply in a way that would automatically increase the value of the currency. The economic impact depends on whether the destroyed notes are permanently removed from circulation, whether they are replaced, and how the overall monetary aggregates change. This distinction is extremely important for Iraqi dinar followers because online discussions sometimes treat the destruction of banknotes as if it were automatically equivalent to a major reduction in currency supply. That conclusion is too simplistic. If a central bank removes old notes and replaces them with new notes of the same value, the physical appearance of the currency may change while the underlying monetary position changes very little. On the other hand, if the central bank conducts a broader monetary operation that permanently reduces liquidity, the implications can be different. The numbers and the policy behind the action are therefore much more important than the fact that banknotes are being destroyed. There is another important factor. Physical cash is only one part of the monetary system. Modern economies do not operate solely on paper banknotes. Money also exists through commercial bank deposits and other forms of financial balances. Because of this, looking only at the number of physical notes in circulation does not provide a complete picture of Iraq's money supply. Analysts need to examine broader monetary indicators and central bank data before reaching conclusions about the direction of the dinar. This brings us to the claim that the existence of Iraqi dinar outside Iraq could become an important supply and demand factor. There is some economic logic behind examining this issue, but again, caution is necessary. A banknote being physically held outside Iraq does not necessarily represent active demand for Iraqi currency. Some notes may be held by collectors, investors, currency dealers, or individuals who simply expect the currency to appreciate. If those holders are not using the dinar in transactions, their possession of the notes does not automatically create the same type of economic demand that exists when businesses, consumers, and financial institutions actively use a currency. At the same time, widespread international ownership can become relevant if circumstances change and those holders attempt to exchange their dinar. A significant increase in selling pressure could create a very different situation from a genuine increase in transactional demand. This is why supply and demand must always be considered from both sides. It is not enough to say that there are fewer notes available. We also need to know how many people actually want to hold and use those notes and at what exchange rate. For Iraq, the long-term story is much broader than the number of physical banknotes being destroyed. The country's monetary future depends heavily on the strength of its banking sector, confidence in domestic financial institutions, international banking relationships, payment infrastructure, fiscal policy, oil revenues, inflation management, and the Central Bank of Iraq's monetary strategy. These structural factors are much more powerful drivers of exchange rate policy than isolated reports about currency destruction. In the short term, news about banknote withdrawal or destruction may attract attention because it raises legitimate questions about how the central bank is managing currency circulation. If confirmed through official data, continued withdrawal of damaged or excess physical notes could provide useful information about currency management, but it should not be interpreted as proof that a specific exchange rate is about to be announced. For Iraqi Dinar followers, this is perhaps the most important distinction to understand. A central bank can change its currency management strategy without changing the official exchange rate. It can improve the quality of circulating banknotes, reduce counterfeit risks, modernize payment systems, encourage electronic banking, or manage liquidity without immediately changing the dinar's official value against the US dollar. The long-term implications could become more significant if currency management is combined with broader monetary and banking reforms. If Iraq continues strengthening its financial institutions, improving compliance, expanding electronic payments, increasing confidence in banks, and integrating its financial system more effectively with international banking standards, demand for formal banking channels could increase. That would potentially make the Iraqi dinar a more functional currency within the domestic economy. But even then, a stronger financial system does not automatically mean that the dinar will suddenly reach an extremely high exchange rate. Exchange rate changes are policy decisions based on economic conditions, and responsible analysis should never promise a particular outcome. Claims about guaranteed revaluation levels should therefore be treated cautiously unless they are supported by an official announcement from the appropriate Iraqi authorities. The comparison between the old Iraqi dinar and today's dinar is still useful, but it needs to be made correctly. The lesson from history is not that the currency must return to a former value. The lesson is that currencies operate within changing economic systems. Iraq's economy, banking sector, monetary framework, international relationships, and currency circulation have all changed dramatically over time. Therefore, historical exchange rates alone cannot tell us what the future exchange rate should be. Another important point is that people should not confuse currency scarcity with currency value. A currency can become physically less common without experiencing a proportional increase in purchasing power. Conversely, a currency can remain widely available while becoming stronger if economic fundamentals and monetary policy support that outcome. The relationship between supply and value is real, but it is not as simple as reducing the number of paper notes and expecting the exchange rate to multiply. So, what should viewers watch going forward? The most useful indicators are official Central Bank of Iraq statements, monetary supply data, exchange rate policy announcements, inflation trends, foreign exchange reserves, banking sector reforms, and changes in the way Iraqi citizens and businesses use the banking system. These indicators can tell us far more about the direction of Iraq's monetary policy than social media claims about a particular revaluation date or exchange rate. If the central bank confirms substantial currency withdrawals or destruction, the next question should always be whether those notes are being replaced, how the overall money supply is changing, and what monetary objective the central bank is pursuing. That is where the real economic analysis begins. For now, the responsible conclusion is that Iraq's currency system is very different from the closed monetary environment of decades ago, and the presence of Iraqi dinar outside the country is one indication of that transformation. Currency destruction and withdrawal can be part of normal central bank currency management, but they do not, by themselves, prove that a major revaluation is imminent. The broader monetary and economic framework remains the key factor. For anyone following the Iraqi dinar, patience and evidence are essential. Rather than focusing only on dramatic predictions, pay attention to official data, policy decisions, banking reforms, and measurable changes in Iraq's economy. Those developments provide a much stronger foundation for understanding where the dinar could go over the long term. Thank you for watching Iraqi Dinar News. Make sure to subscribe to the channel and like the video for responsible, factual, and balanced updates on the Iraqi dinar and Iraq's economy. Remember, currency markets and exchange rates can change for many reasons, and no future exchange rate can be guaranteed. This content is provided for informational and educational purposes only, and is not financial advice.